Hi, I'm Don Singletary, and welcome to the channel. We teach affordable day trading. There's a lot to learn from losing trades as well as the winning ones. That and more coming up right now. If you're new today, let me welcome you to the channel. We teach affordable day trading here. We use only, and that's the only thing we do on this channel. We're very focused. We teach to learn day trading using the new Micro Emini contracts. They're 1/10 the size, much smaller, and because of that, much less risk as you learn how to trade. Now, everybody wants to learn how to win a trade, but this is a high-risk type trading, and you'll probably lose around 40% of your trades. That's why it's very, very important to know how to lose properly. In my book, I talk about what a successful trade means. Obviously, if you make money, that's a successful trade. But also, there's a mistake that's very common, especially among people new to trading, and that is letting their losses mount up and offsetting all those winning trades that you get over time. So today we're going to take a look at a losing trade, and I'm going to name this trade, I came too late to the party. It's something that happens a lot, and let's talk about that more right now. Every trader learns quickly there's a high price to be paid for staying in a trade that does not go our way for too long. So to trade successfully, you have to have losing trades that are also successful. Now, anybody who's been trading for any length of time has had that experience. It's awful. Your account gets drained because a good trade goes bad or simply doesn't go your way. You hesitate or you resort to hope, which is not a viable strategy, not at all. In fact, hope is a very expensive habit in day trading. You can see on the chart here, at 9:30 the market opened, and from there until after 11:30 is highlighted in the yellow area. It didn't really go anywhere. The price at 11:30, 11:45 was still about the same price as it opened at 9:30 Eastern Time. Now, I hadn't been staring at the screen all morning, so I came back in and checked on the market again and decided to put this trade on. The time was about 11:48 in the morning. I saw the market took a great dip down. The MACD down there, you see, green line well below the red line, both below the zero line that suggests a downward move in prices, and it's already headed in that direction, and that seems to be the prevalent trend in the market right now. So I pulled the trigger on the trade. Let me hasten to add, I do realize how counterintuitive it is for me to say you have to learn how to lose trades the proper way. It's a part of this kind of trading. It may not be in other types of trading, but this one, it definitely is. And in most day trading scenarios, you'll find it's that way. I shorted one contract in 1982. You can see my stop's 3 points away. Now we're $5 a point. So my stop is, I'm risking a maximum of $15 on this trade, and we're underway at 11:48. And you can see from where I entered the trade here, back up there around 11:10, 11:15, about 25 minutes before I got into this trade. I had a series there of 1, 2, 3, 4, 5, about 6 red candlesticks, and they're all closing downwards in their 5-minute time frames. And so I have good reason to suspect that downtrend may continue a little bit, but as always, there's no guarantee. Now, I do have an expectation, and that's good, as it should be. I expect this trade the price to move down so I can make some money. And I'm going to give this trade a little bit of time to try to prove itself to me. I have nothing to prove to the market. I'm just trying to get the market to tell me what's next. And it will, whether it's what I want to hear or not. Now, the fastest way to bring down your confidence in trading is to expect too much, or to never expect losers, or not to be ready for whatever's going to happen next. Aside from your account balance, the next most precious thing you have to protect, and do not risk it any more than you have to, is your confidence in trading. It's a great friend to have on your shoulder, and I would say it's probably a requirement. And you gain that by experience over time. It doesn't happen the first time you make a couple of trades. If you make a trade right away and it makes money, that's good for your confidence. But you have to balance things as you go, because there are going to be a great many trades that don't go your way. You have to sort of get rid of the mentality that if you don't make money on a trade, that you did something wrong. just the nature of this kind of trading. It's very risky, and there's no way you can completely eliminate enough of that risk not to have a great number of losing trades. So you better learn how to lose just a little bit instead of a lot, and turning your thoughts to hope, and don't guess a market turnaround. Just read the market and follow it. It'll tell you what it's doing. Not ahead of time, but it'll tell you in the moment. There is something about trading that's definitely predatory. You're trying to get yourself into an opportunity to make money and then to exploit it when it happens. And when it doesn't happen, you have to be equally prepared to be able to manage getting out of a trade. And that's what this video is about. Okay, we've been in the trade for 4 minutes now. It's showing us nothing. In fact, I'm just about even money. That's not a good sign. So that puts up a red flag for me. I didn't see an immediate continuation of the downtrend that I was hoping to jump on and ride to a profit. So now I'm getting very defensive about this trade. I'm not going to cut it any slack whatsoever. It is not going to take my money. Or if it does, just a few bucks, not very much. And remember, you have to protect your account balance, and you have to protect your confidence. And you protect your confidence by paying attention and being present at the controls about what's going on with this trade. And it won't always be what you want to happen. You're going to have a lot of winning trades. You're going to make some money. But if you want to keep that money, this is the other side of trading that you absolutely, positively must learn. This is not like buying a great stock and watching it get better and better over time, even though it goes down once in a while. This is fast trading, not gunslinger fast, but the trades typically, many of them don't last more than 5 to 15 minutes. I think that would probably be about 80% of your trades fit into that short time category. So if you understand that, you get a little bit better at managing what's going on. There is a link to a free trade simulator, no credit cards or anything, and it's in the text. That link is under Trade Simulator. You'll see the link down there. 1985 is where I have my stop, and the trade's not showing me very much, so I'm getting a little defensive. Yes, I am. Not emotional, just defensive. I'm going to move that stop down and make this trade either make me some money or I'm getting off the ride. And you'll see me with my Tastyworks click and drag mouse there moving the stop. And I'm moving it up and down a few times here. And there's a reason for that, because the cursor, not the cursor, but over in the right margin where my mouse is, it's covering up the trading price. Of course, it's at the top of the screen too. But I'm really trying to find a way to get out of this trade and really call it a day, or it's going to make me some money. And to do that, I decided that I would crowd this trade by bringing my stop down to just a tad above it. So now my stop is 1983. You see, I'm only risking $8.50, 1.7 points. That's my worst case scenario. And I guess I still have just a twinkle of hope, but it's fading fast. So what I've done here is cut the damages. I'm not going to be able to have a trade now that's going to get into my account for any significant money. So I'm controlling that, not the market. And that's how I have to react, because read them and weep. Those are the cards I've been dealt. Got my stop down to 1983.4 now, and I've been in this thing for 8 minutes. It's showing me absolutely nothing. I don't want to make it a bigger deal than it is, but you don't have to be master of the universe to control a little trade like this. This one's pretty easy. Some of them get into a great deal of difficulty, but you see, you got to protect your confidence and your account balance. That's rule number one. Look at this. I wanted to show you what happened during the trade with the candlesticks. See how they're flat up there in the top blue rectangle, and the MACD in the bottom. See the vertical green lines, how they're almost level and even shortening a little bit, and that's a sign that we're definitely losing momentum. Now, if you're new, I got to tell you, there's no way you should know this. You weren't born with that knowledge, and With more experience, you'll get better at reading them because, like anything you learn, the more often you do it and the more variations you witness, the better you'll be at trying to find out what's going to happen next. As a beginner, you're also finding out that a lot of the terms in futures and commodity trading are very confusing, and that's true about technical trading too. For example, they're called leading indicators sometimes. Now, anybody with half a brain is going to assume from that you mean they're going to be able to tell me what's going to happen next. They can predict the future. No, they can't. None of them can. And if somebody tells you that, I'm going to bring a little phrase I learned in West Texas. They are peeing on your boots and telling you it's raining. They cannot predict the future, but they can and do tell you what's happening during a trade. In my mind, a leading indicator is one that helps you determine something about the probability of whether a trade may or may not be successful. And that's very helpful, but they don't tell the future. I think I forgot to tell you, I lost $7 on the trade, so no biggie. You see this pattern on the screen here that we just talked about. It's very, very important, I think, not everybody does, to have this information in front of you while you're trading. That's why I love and why I chose the Tastyworks software to do my trading with and to try to help beginners learn to trade, because you need to have all these things in front of you on one screen. Tastyworks calls it their see it, click it, trade it setup. And that and being able to move my stops and target prices up and down and to enter the bracket orders where I have a stop order from the very beginning of a trade. All that I think is very important, and you can find out more about Tastyworks in the text below the video. Look for the brokers link down there. If you've ever tried day trading stocks, you found out rather quickly about the pattern day trading rule. Without at least $25,000 in an account, you can't do more than 3 trades a week. That's the pattern day trading rule. It does not apply to futures. It does not apply to everything on this channel that I've been showing you. That minimum account balance does not take any effect. The PDR has no ruling over the futures market. It's a completely different type of product altogether. One thing I'm going to try to do more of in the future is bring you more losing trades. Of course, not to teach you to lose, but to teach you to keep from losing, of course. And I think there's some finer points. You know, it's actually easy in a trade when you're making money. You don't get stressed out and start getting flustered and making bad decisions. And you don't have that fear of missing out or, oh my God, I'm in this trade, I'm down to $50, I don't want to get out, and then you're down $100, and pretty soon you've blown up your account. I mean, that's how it happens. It's a very common story, and I'm trying to keep you clear of making those mistakes. So I'll be doing that in the future. By the way, check out my book. The proceeds help support the about 130 free videos here on the channel, which I'm inviting you to subscribe and join us. There's over 13,000 subscribers on the channel now, and this is your official invitation. Hit that subscribe button, and if you click the bell, you'll get a text or an email notification each week when I put up the new trades on the channel. I was saying about my book, it cost about as much as a large pizza. It's not very much. And the nice thing about the book is that it's not a long book. It only teaches how to trade micro E-minis. There's so much about futures trading. And what I did with the book was to just do one thing and do one thing simple and one thing well. And it will make you learning to day trade these micro E-minis faster and easier. It's hard when you're beginning to know, with all the new terms flying around, which ones are a must know and which ones are the nice to know. And the book straightens that out for you. It talks about how to pick a broker, talks about the type of stop orders, it tells you about the increments, it explains mostly the details of the margining, the span minimum margin requirements for futures trading, and a lot of things there. And it'll really help you get a faster start. And I appreciate you hitting the like button if you want to see another video like the one you saw today, because that's kind of like a vote. It helps me decide what you, my audience, thinks they need to see more of. And your comments and hitting that like button to let me know so I can count up those and make some more videos for you coming each week. Sure was a lot of fun today. I hate to turn it off right now, but I'm out of time. This is Don Singletary. I hope every day is a payday for you. Thank you.